Simply put, and straight to the point in today's video, I'm going to be teaching you what I consider to be one of the most accurate ways to determine what any financial instrument is likely to do next. And what that means is one of the most accurate ways to determine the trend of any financial market. Now, the problem with most traders is that they don't understand how to determine if a market's likely to continue going down or likely to continue going up. And because of this, they end up buying when the market's heading down in a downtrend and their stop loss gets hit. Or they sell while the market's in an uptrend and unfortunately the market keeps heading higher, eventually stopping them out, leading to devastating losses and possibly even blown accounts. You see, trying to trade without understanding how to identify a trend in an accurate way, in an objective way, is like trying to hit a baseball thrown 90 miles an hour with your eyes closed and the smallest bat in the world. It's just not going to happen. You're going to miss that ball 10 out of 10 times and get lucky every now and then. And then in the same token, if you don't understand trend and how to read it objectively and accurately in the Forex market and any other financial market, you're going to miss out on some great opportunities, and even worse than that, it can lead to some devastating losses and your account to go in the opposite direction that you would like it to. So that's why in this video, I'm going to teach you one of the most accurate ways I know to identify trend and one of the most accurate ways I know to identify what the market's likely to do next. So if that sounds interesting to you, all I need you to do, click that like button to help out with the YouTube algorithm, click the subscribe button down below the video to the right hand side because we come out with content like this each and every week. Go ahead and follow us over on Instagram at The Trading Channel. While you do that, the intro and disclaimer are going to roll, and I will see you directly after. Welcome back, traders, and I want to start by showing you a practical application to what you're going to learn over the next 10 minutes. You see, if a market's trending in either direction, let's call it an uptrend for now, then you're going to be trading based on two different types of strategies. You're either going to be trading based on pullbacks of that or breakouts. In both situations, you're expecting the market to continue in the underlying trend. So for example, what you see on the screen is a market in an uptrend, right? We're trading above the 50-day moving average. We're making new higher highs. And what you may say is that you were looking for this market to come back to an area of value and put in some type of entry reason, area of value being the previous level of resistance. That would be an example of a pullback trade. Now for a breakout trade, what you would be saying is you're waiting on the market to break out of a certain level of resistance, or you're waiting on a flag pattern or something of that nature in anticipation, again, of this market continuing in the underlying trend's direction, in this case, that being a bullish trend. So with that being the case, what I need you to understand is that most traders are not failing because they don't understand pullbacks or breakout trades like this. Most traders are failing because they don't understand which direction they should be placing these types of trades in. And the reason they don't understand that is because they don't have a way to accurately and objectively identify a trending market and which direction that market's trending. And what I want you to be able to do by the end of this video is not only tell which direction the market's trending, but also when you should sit on your hands because the market's in consolidation. I want you to keep that in mind as we move forward in the video over the next 10 minutes and you learn these exact rules of identifying trend. Just remember that identifying trend, as powerful as it can be for your trading, is not going to be the only thing you need. And identifying trend is there to help you understand the direction you need to trade with your pullback and breakout trades. With that said, let's go ahead and jump into how to identify trends in the most accurate way and in an extremely objective way right now. All right, guys, so way number one of identifying trend is going to be using moving averages. And before you leave the video thinking that I'm going to tell you to just sell when the moving average slopes down and buy when the moving average slopes up, that's not what this is going to be at all. The entire point of this is to create objective, easy to follow rules. And that's exactly what we're going to do. It's going to be a completely different spin on using a moving average. So let's go ahead and get started with it right now. So let's use this right here as the market breaks below. This is the 50 EMA. The EMA you use, I know I'll get 100 questions about this, does not really matter as long as you're using one of the top four. 20, 50, 100, and 200 are the top four that are used. If you're more looking at a long-term trend, use the 200. Midterm, use the 50 or the 100. Short-term trends, use the 20. It just depends on your preference. But for me, I'm using a 50 EMA. And let's use this as a starting point where I have my black line now. So if that's the starting point, what I'm seeing right here is this market, as long as we're trading below the 50 EMA, continuously trading below the 50 EMA, we're in a downtrend. We're still in a downtrend, even if wicks touch the 50 EMA. We're in a downtrend if bodies touch the 50 EMA. For me, we're in a downtrend until one thing happens. What is that one thing? Well, the first part, it's a two-part signal. The first signal that we're out of this bearish trend. Obviously, we've been under the 50 EMA here. The first signal for me that we're out of this trend is a candle that closes above it that doesn't touch the EMA at all. You see this red candle right here? This red candle does not touch the 50 EMA at all, meaning no wick touches it. There's space between it and the 50 EMA. This is my first indication. But that's not all I use to say, okay, we're expecting a reversal now. The downtrend is over. At this point, the downtrend still exists for me. The only time the downtrend is over is after I see a close above this candle. So I need my candle that has space. After a trending market, we have a market trending down. We have a push up. We have a candle that has space above the 50 EMA. Now what I need to see is a close above the high of that candle, which is right here. And until I get a close above the high of this candle, I still consider this market in a bearish trend. So let's continue pushing the market forward and see what we find. At this point, we have another space between it, close above the 50 EMA candle, giving me a hint into a possible reversal to the upside. But do we get a close above this candle? No, we do not. So we just keep the market pushing forward. No close above, nothing going on here. I would have to wait on this candle to be printed. Follow me here. This is not super complicated. If you have to rewind the video, do it. But for me, we're in a downtrend. It's as simple as this. For me, we're in a downtrend until we get a candle that does not touch the 50 EMA at all, followed by a candle that eventually closes above it. The candle doesn't have to be directly following. I'm just looking for a close above that candle. At the moment that we get a close above the candle that did not touch the 50 EMA at all, that is when I expect there to be a reversal to the upside. And there we go, start of a new trend. We'll do the same thing on the downside. So now we have the start of a new trend. We're trading above the 50 EMA, right? And what am I looking for before I say this market is reversing back into a downtrend? Well, what I want to see, because we're in the opposite direction now, we're in an uptrend, I want to see a red candle that does not touch the 50 EMA at all. Pretend this doesn't touch right here. And then I want to see a candle that closes below that. That's whenever I consider there to be a very likely chance that there's going to be a reversal. So the rules for this would be, I consider the market in an uptrend as long as we're trading above the 50 EMA. And I consider that uptrend to be valid until we get a candle that does not touch whatever EMA you're using. For us, it's the 50 right now, that does not touch the 50 EMA. And then another candle that closes below that candle gives me confirmation that we are no longer in an uptrend. Now, this confirmation that we're no longer in an uptrend is not all either. And look, guys, it's complicated sometimes, but there's no way you should be super confused right now. If you are, rewind the video 5 minutes and watch that again. This is an extremely simple way of identifying trend and an objective way to tell yourself whether you can trade to the upside or downside based on that trend. Right now, what we know is that we're in an uptrend until we have a candle like this that gets closed below. We don't get that here either. We get a candle that doesn't touch the 50 EMA, right? But we don't have a close below this candle. So we're still considering this market in an uptrend. We're still bouncing off that 50 EMA, so I don't want to change my bias until I have confirmation to do so. That confirmation, exactly what we've already talked about, close below candle. When I say close below, I mean one that doesn't touch the 50 at all, followed by a candle that closes below the low of that candle. With that being the case, I would expect some type of reversal to the downside. Of course, it's not foolproof, and it does happen. You do, in fact, lose trades sometimes doing this, but it's an objective and simple way that does give an advantage. But guess what? Just because the market created a candle that didn't touch the 50 EMA and then created a candle that closed below that candle That's the rules for our possible reversal. That's the rules for us to what? Stay out of trades. It's the rule where we sit on our hands and we're patient. I don't go short because I see this one signal. That's not an entry signal. That's telling me that the market is showing me that it's possible that it's going to reverse. And if I don't have certainty that a market's in an uptrend, and I don't have certainty at this point right here that a market's in the downtrend, then why would I place a trade? You see, at this point, I don't place trades. At this point, the market shows me it's possible to reverse. And until we break into new lows, or we break up again and break into new highs, I don't consider any type of trend in this market. To me, that means this market's in consolidation and I'm patient sitting on my hands. So the 3-step process that I just taught you using this moving average technique would be to consider a market in a downtrend like this. We have a push down, we're trading below the 50 EMA. Consider this a downtrend until you see a situation where the market pushes up, has a candle that doesn't touch the 50 EMA at all, or whatever EMA you're using. I just use the 50 EMA, so I'm using it as preference. Then, even after that, you want to see a candle close above that. This does not mean the market's 100% going to reverse. Nothing's 100%, but this doesn't even give a great factor of the fact that we're going to see a reversal. What will, though, is once you see that scenario, waiting for confirmation, that scenario, after we have a candle that doesn't touch the 50 and a candle that closes above it, just tells you to stop trading to the downside. We trade the bearish trend until the market shows us that it's possibly going to reverse. That just tells you to stop trading to the downside. That does not tell you that it's time to trade bullish. What does is when the market makes a 1, 2, 3 move and pushes up, breaking into new highs above your EMA, that tells you that we're really likely to see a continuation of that uptrend and possibly a complete reversal to another side. So breaking that down one more time, waiting for a candle that doesn't touch the 50 EMA at all, then waiting for that candle to have a close below or above candle, and then waiting for confirmation by the market to break into new highs or lows. I imagine for complete beginners that might sound a little bit difficult, but go back and rewatch the last 9 minutes of this video. I promise this is one of the best ways I've ever found to identify trend in a market objectively and with pretty good accuracy. Now, for complete beginners, another way you can use moving averages to accurately identify the trend of a market is just by using a fast and slow moving average. So what you see on the screen is a 50 EMA, blue line, and a 20 EMA, orange line. A very simple way, if you're a complete beginner, to identify trend is to say the market's in a downtrend, and I look for sell trades if the 20 EMA is below the 50 EMA. I look for possible buy trades when the orange line or 20 EMA is above the 50 EMA. So that's another extremely simple and objective way that can actually improve your trading. It sounds extremely simple, but if you stick to that rule, I only trade pullbacks in the upward direction when the orange line's above the blue line or the 20 is above the 50, and I only trade breakouts when the 20 is above the 50. You'd be surprised at how much more accurate your trend trades will become. All right, so I really hope you enjoyed that beginner lesson, but if you are ready for some more advanced training, then we just had a few graduates come out of the EAP Training Program, our flagship program here at the Trading Channel. I'll post some of their testimonials on the screen, and that is incredible news for them. And that's also incredible news for you, because that means that we finally have some spots available in the EAP training program. And while you glance through some of the comments on the screen, I want to tell you that if you're struggling to profit right now, then I've been where you are too. I struggled for over a year before I found a way to be consistently profitable. I made every mistake you can think of. I moved stops. I used poor risk management. I traded strategies that didn't work. I followed a signal service that ended up with me almost blowing my entire account. But after that first year, and after nearly blowing an entire account, I found the real path to trading success. And consistently profitable trading became as easy as counting to 6. And that is what I teach in the EAP training program. I created a strategy that only uses 6 simple rules to create an edge over the market. So once you memorize these rules, trading becomes as easy as counting to 6. These rules are completely objective and easy to follow, And although just having a strategy is only one part of the equation, it is a very large part of that equation. In the EAP training program, we also have lessons on risk management and discipline to make sure that you have everything you need to get on the right track to becoming a consistently profitable trader. And here's a look at some of the things that are included in the course. As you can see, we have beginner lessons that teach you everything you need to know about technical analysis in terms of what you're going to learn in the course. We have a transition course, which is meant to take you from where you are to becoming consistently profitable. And after that, we have an advanced course that is meant to take your trading to that next level. We also send out 3 to 5 email alerts every week. These are not meant as signals. Let me clarify that. But instead meant to show you exactly how I am looking at the market. And we also do a review video at the end of every couple of weeks to show you how the strategies are performing. And you can check those out right here. So if more advanced training is something that you are looking for, then we do have a few spots available in the EAP training program. This program also comes with priority email, meaning you can email me at any point that you have questions and I will answer you ASAP. So if a trading mentor is something you are looking for, then look no further. Go ahead and click the link in the description for the EAP training program, and it would be a pleasure to have you aboard and to have you join us in the EAP training program. If not, that's totally fine too. Make sure you're subscribed here on YouTube. Make sure to click that like button for me if you enjoyed this video. Follow us on Instagram at The Trading Channel, and I will see you in the next video.